Okay, so if you are preparing for paper FR, then this video is for you. We have here one of the past ACCA questions, and for this particular question, we have the name to be Price War. Price War has a year end of 31st March 20x9. And as usual, what I like to do is this. So I would like to write this year end down, 31st March 20x9. So a question for you. If the last day of the current year is 31st March 20x9, so when do you think this period will have started? Okay, so this is the way to go about that. Now, if the last month is March, if the company is to start a new period, reading forward, what month would they start a new period? Of course, the month is going to be the month of April. So now it means this period must have started on 1st April. And then for the year, if 20x9 is there, so you are going to have 20x8 here. Of what importance is this timeline, if you like? So this is the start of the financial year, and any figures given to us on these dates will be the opening. So and then here, any figures given to us is going to be the closing. So 1st of April 20x8 is going to be the opening, and then 31st March 20x9 is going to be the closing. Okay, that's fine. Now, the other thing we need to check now will be the requirement of the question. So there are two requirements here for us. The first one, which is the A part, is asking us to prepare the statement of profit or loss and other comprehensive income for the year ended at 1st March 20x9, and this is going for 10 marks. The B part says prepare the statement of financial position as at 1st March 20x9, and here again we have 10 marks. So if you put this together, we have 20 marks. Good. Apart from this, is there another thing we are to be conscious of here? Well, I can see a set of balances here. So we have a set of balances here, and if you look very well, I'm sure you can see that this is going to be debits. The column here is going to be for debit balances. That's talking about the left hand side, and for the right hand side, so you have credit balances there. Okay. Beyond this, we also have the additional information given to us as relevant notes. So we have note 1 that has to do with non-current assets. Note 2, we have this, and this has to do with our knowledge of construction contracts. Good. Note 3 has to do with revenue recognition, and note 4 has to do with our knowledge of taxation. Taxation is covered by International Accounting Standard number 12. That's talking about income taxes. And tell you what, this note 4 is the focus of this video. So the video here is going to be meant for this particular note. So what are we going to do? A quick one. I'm going to detach these notes 4. I'm going to detach it. So let's take it to where I'm going to be having the flexibility of doing some writing. So imagine if I have it there. Not only that, I'm going back to the trial balance, and I want to bring out the relevant information regarding this income taxes, which is note number 4. So I have these bits. I'm going to put it beside or somewhere here. So let me just put it there. Okay, so it is the usual for the examiner to tell us the notes that the items in the trial balance they relate to. So for instance now, these two items on the trial balance, current tax and deferred tax, if you look at them very well, the examiner already cross-referenced them, saying note 4. So we have note 4 here, and these are the relevant we have the relevant figures as trial balance extract. So note 4 and the relevant trial balance extract. Okay, so what do we do at this point? Well, at this point we want to determine what is the amount of tax that we are going to record in our statement of profit or loss and statement of financial position. So to do this, I have a pro forma that we are going to be making use of. And then my pro forma will start with deferred tax account. So a quick one here. For deferred tax account, just like any other account, you have debit and credit to this account. But I need you to be conscious of this. Can you see this is talking about negative sign and this is talking about positive sign? So in our deferred tax account, so what we are going to be doing is we want to get the opening balance and the closing balance. So the opening balance of our deferred tax will be picked from the trial balance, and that I have stated here. So you go to the trial balance and pick the opening balance of the trial balance. So again, if I just come here and put debits and here credits, because from the original trial balance, I'm sure you know that you have debit, credit. So that tells you now that this is debit, while this is credit. Okay, so I've gotten on the debit side 700. Okay, maybe I should also quickly put things so that I don't do anything that will mislead you. So I've gotten my $sign and 3 zeros there. So you have debit, you have credit. Good. So the 700 here is actually 700,000, and then the 84 here is actually $8.4 million. Okay. What else do I need to show you? Well, in my pro forma, I want to bring out the opening balance and the closing balance that will be recorded in our deferred tax account. So if you see these bits, this is saying deferred tax, and I like you to know this. Unless otherwise stated, the figures in the trial balance, unless otherwise stated, they are going to be the opening balances. So the deferred tax of 8.4 here is the opening balance. So let's go and drop that 8.4. Let's drop it in the pro forma. So in my pro forma, I have there 8.4. Okay. Then where do I get the closing balance from? Well, from the notes. Note what? Note 4. So let's go back to the notes. So we want to read now. It says the directors have estimated the provision for income tax for the for the year ended 31st March 20x9 at 4.5. Well, this 4.5 is not sounding deferred. It's not deferred tax. Reading on. The required deferred tax provision, did you say that? At 31st March 20x9. So 31st March 20x9 is the year end. So, and any figure given to us as at 31st March 20x9 is going to be the closing balance. So, to start with, we know that this is saying deferred tax, and we also know that this is telling us that at the year end. So, that tells you now that this 5.6 is the closing balance of our deferred tax. So let's go to the pro forma. So how much is that? So 5.6. Okay, so 5.6, here we are. We'll drop it in. Now don't forget what I said. I said the opening balance you are picking from the trial balance, and then the closing balance of deferred tax you are going to pick from the notes. So this 8.4, we picked it from the trial balance, and then this 5.6, we picked it from the notes. What notes? Note 4. All right, so we are setting up the accounts. So let's put this there. What other things do we need? Okay, so if I can interpret this quickly, so this is telling us now that at the start of the year, the liability of Pricewell was standing at $8.4 million. That's the liability. The deferred tax liability at the start of the year was standing at $8.4 million. Whereas at the year end, you have this reduced to $5.6 million. So what is going on here? It means between the opening and closing, something must have happened. And then that thing that happened is a reduction. So the reduction in deferred tax. So what do we do? Please get your calculator and say 8,400 deducts 5,600, and this is going to give us 2,800. So the 2,800 is here. Okay, now can I tell you another thing? You see, the 8.4, we picked it on the credit side. This 8.4 is on the credit side of the trial balance, and I want to show that credit. Okay, now a quick one. We said it that negative figures in the deferred tax accounts, they are debit balances. Positive figures, they are credit balances. So this 8.4, because it's a positive figure, so it's going to be a credit. Now this 5.6 is going to be a credit. But hold on a moment. Would you agree that this 8.4 reduced to 5.6? And how can your 8.4 become 5.6? So that means this 8.4 must have been reduced by 2.8. So this 2.8 is a reduction from the 8.4. And this negative figure now is this. So in deferred tax account, it's going to be a debit. All right, so I'm hoping that is not something that is difficult for you to pick. So 8.4 has now become 5.6 as at the end of the year. So that means there must have been a reduction in our deferred tax liability. So 2.8 is the reduction during the year, and that 2.8 has gotten a name. Now the name is movement in deferred tax. Why movement? Well, because there's a movement between opening balance and closing balance, and the movement here is a reduction, and that reduction is referred to as movement in deferred tax. So it's a debit balance. As it is a debit balance, there will be a need for us to get the credit balance. So now, for every debit, there must be a corresponding credit entry. So the 28 is a debit balance in the trial balance account. Where would the corresponding credit entry go to? Well, the corresponding credit entry will come to statement of profit or loss. Now look at this other accounts. So I will give it to this. So it's going to be 2,800. That means the 2,800 that you see here as a debit, its credit entry will come to the statement of profit or loss account. So the debit is in the deferred tax account, and then the credit is in the statement of profit or loss account. So I'm hoping this 2,800 is not a problem for us to pick. All right, moving on. So we need to go back to the story, but just before we go back to that note, let's tidy up this and say this is the closing balance, and the only thing that left this closing or left this deferred tax account is the movement in deferred tax, and that movement left the deferred tax account to statement of profit or loss account. So 2,800 is a debit in the deferred tax account, but the corresponding credit entry is in the statement of profit or loss account. Okay, let's go back to the notes. So note 4, we are going to read it from the beginning. It says the directors have estimated the provision for income tax for the year ended 31st March 20X9 at $4.5 million. So you must remember that this is sounding end of the year, 31st March 20X9. So usually this is what happens when a company has made a profit before tax. This will be recorded in the statement of profit or loss of that year, and you expect the tax people to come and pick their own portion of this profits before tax. But tell you what, the tax people or the tax authorities through their representatives will not show up there. So when will they show up? They will show up next year. So what the directors of price work will do or could do now is to have a guess and say, okay, by the time the tax people show up, what will be the amount they'll be asking us to pay as the income tax expense? And then they want to guess. That guess is what we have here as the estimated provision for income tax. And if it's saying an estimate is not paid yet. It's something that the double entry will not even pass through cash or bank account. So what will be the double entry? Well, the double entry is going to be you are debiting the statement of profit or loss, and then the corresponding credit entry will go to your current liability. So this 4.5, I can quickly write the double entry for you. So it's going to be debit your statement of profit or loss with 4.5, and then the corresponding credit entry. So you have to credit your tax payable. So current tax payable 4.5, and this is going to be a current liability in the statement of financial position. Good. So this is going to be the double entry. So let's go and attend to this debit entry. Now remember, the debit entry must go to the statement of profit or loss, and we already have our statement of profit or loss open. So statement of profit or loss, here we are. The first item here, we'll take that 45. So 4,500. You remember I told you it should be a debit in the statement of profit or loss, so it's a debit. All right, good. Now let's continue reading. Let's keep the credit entry for a moment. So we'll come back to the credit entry to take it to where it should go to. So going back to the notes, it says the directors have estimated the provision for income tax for the year ended at 1st March 2009 at $4.5 million. We've treated this 4.5. Now, the required deferred tax provision at the year end, which is 31st March 2009, is $5.6 million. We've treated that as well. And we are told here that all adjustment to deferred tax should be taken to the statement of profit or loss. Now, that was what we did here. So these 2.8 is the adjustments, and the examiner says we should take it to the statement of profit or loss. You always do that. The examiner is just being generous by telling us that in the notes. So the adjustment, which is the movement in deferred tax, should be taken to the statement of profit or loss. So that is taken care of already. Reading on. So it says all adjustments to deferred tax should be taken to the statement of profit or loss. That we have done. And look at this bit. It says the balance of current tax in the trial balance represents the under/over provision of the income tax liability for the year ended 31st March 20x8. So the current year end has a date, the end of the current period has the date of 31st March 20x9. So if you have 31st March 20x8, that must have been the end of last tax year. So every year there will be a provision, and if the tax people show up and it is the same amount that the directors provide for that the tax people are asking for, that means we'll say the directors, they got it right, because there will not be under provision, there will not be over provision if the directors, if they have gotten it right. But what happens if they did not get the provision right? What they think the tax people will ask for if they did not get it right? Now, that could either give rise to under provision or over provision. Okay, but that's not an issue here, because if we are going to have under provision that relates to last year, that's why the examiner has given us the date there, last year. So if we are going to have under provision or over provision, the examiner will give us the figure. But where will the figure be? Well, the examiner will give us the figure in the trial balance, and we want to quickly go and check what we have here. So look at this. This is saying current tax. You have it to be 700 here. Well, unlike the deferred tax of 8.4 that will always be on the credit side of the trial balance, this current tax could either be on the debit side of the trial balance or on the credit side of the trial balance. If it's on the debit side of the trial balance, we refer to that as under provision of last year. If it's on the credit side, that is over provision of last year. Okay, you don't have any problem. So what you do is to come to the trial balance. So we have this 700 on the debit side of the trial balance. Pick the 700 and give it to the statement of profit or loss. So the 700 is a debit balance. Come and give that debit balance to the statement of profit or loss. So we have our statement of profit or loss here. So that 700 is there and is a debit. So that debit is from the trial balance. Okay, so your statement of profit or loss cannot have more than these three figures, unless you have a case of tax refund, which is going to be a different thing entirely. But let's just focus on this particular question. So we want to tidy up what we have here at this point. So don't forget, there are two accounts here. We have an account for statement of profit or loss regarding the story of taxation, so statement of profit or loss, And for statement of profit or loss, there are up to 3 items that you could have regarding taxation. The first one is going to be current year estimates. And where would you find that? You'll find it in the notes. So in the notes, we have it to be 4.5. So we picked it. That 4.5 is what we have here. 4.5. Now, we have the debits coming to the statement of profit or loss. So please don't forget, I need to show you where the credit of this 4.5 will go to. All right. Now, for the 700, you will just go to the trial balance. If it's on the debit side, pick it from the debit side of the trial balance and drop it here. If it's on the credit side of the trial balance, pick it on the trial balance as a credit balance and drop it here. So this will either be a debit balance or a credit balance. So whichever way the examiner has positioned it in the trial balance, please come and drop it here the same way. A debit on the trial balance, come and drop it here. Credit on the trial balance, come and drop it here like that too. But these 2 8s, you can't just drop it anyhow. Now, is the difference between the opening balance of our deferred tax and the the closing balance of our deferred tax. So you have a difference of 2 8s. And how do we know it's a negative balance in the deferred tax account? It's a negative balance because the liability of 8.4 at the start of the year has now reduced to a liability of 5.6 at the end of the year. So this liability got reduced, and that is why we have it as a negative figure in the trial balance. A negative figure, in the deferred tax account, I should say. Sorry. So the 2 8s is a negative figure in the deferred tax account, and you just have to remember what I put down here for you. In your deferred tax account, a negative figure will attract a debit balance, and then a positive figure will attract a credit balance. Okay, that's why this negative is a debit. Okay, this positive is a credit, and also this positive is a credit. Okay, so if you understand all of these bits and pieces, so what we are going to do now is to net off what we have here. So let's net off what we have. So the 2 8 already brought it here. So let's net off this. We want to get the net figure of these 3. So would you agree that the total of our debits is more than the total of our credits? So we have 4.5 debits. So 4.5 debits. We also have 700 debits. So if you put the 2 debits together, that comes to 5,200 debits. So 5,200 debits will swallow 2,800 credits. So it's like saying net of 5,200 debits and 2,800 credits. So what you have is going to be a debit balance. Why will it be a debit balance? Because you have more of debits than credit balance. So now from the 5.2, deduct 2,800, and that leaves us with 2,400. So if I can tidy up this, so the net is going to be 2,400. This is 2,400 debits. Okay, so there you have it. So what are we going to do now? Let me just tell you this. You see, in FR, there are 3 things you must learn to do. Number 1, you must know how to process any note that is given to you. So like this note now, this note 4, you must know how to do the processing. So the processing is what we've just done. And while doing the processing, you need to check the relevant figures in the trial balance. For instance, now, regarding taxation, we know that the trial balance asks for us this 700 as well as this 8.4. So you need to pin the notes, which is note 4 here, and the trial balance extract. You need to pin them together. So process the information. That's the first thing. When you are done processing the information, the second thing you have to do is to check the figures that your processing must have generated, and you want to bring out the relevant figures, because it's not going to be all of these figures that will be relevant at the end of the year. So from this, you want to bring out the relevant figures. So what are the relevant figures? Okay, let's start with deferred tax account. So in our deferred tax account, we have 84, we have minus 28, and we have 56. So the relevant figures at the end of the year is going to be the closing balance of deferred tax, which is 56. So let's put that down. Relevant figures as at the end of the year. So we have the closing balance of our deferred tax account, and this is 56. So this 56 is going to be here. 56. Okay. Now, and it's going to be a liability. What type of liability? Non-current liability. So 5,600. And for every liability in the liability account, there must be a credit. So this is 5.6 credits. Okay. So what else do we have in the deferred tax account? The 28, which is a negative figure, we already have it in the statement of profit or loss, so it's not relevant again. So the only thing that is relevant in the deferred tax account is the closing balance. Good. So let's come to the statement of profit or loss. What will be relevant? Okay, now let's start with this 45. You remember the other time when I was giving you the double entry of the 45, I said that you would debit the statement of profit or loss with 45, and that we did. So that debit is what you can see here. But what about the corresponding credit entry? The corresponding credit entry will go to the statement of financial position, I should say. Statement of financial position will receive it as a current liability. As a matter of fact, we call it current tax payable. So current tax payable. So it's going to be 45. So this is 4,500. And is a liability. For every liability, there must be a credit entry in the liability account. Good. Okay. Now we have the 24. This 24 is relevant. So the 24 comes in and it's going into the statement of profit or loss. So look at it as a debit. So it's going to be a debit in the statement of profit or loss. So at the end of the day, these are the three relevant figures. Okay, so we have done the processing. We've been able to extract or bring out the relevant figures, and these are the three relevant figures. The third thing that you must remember is the final destinations of these three relevant figures. And their final destinations will be the 24 will go to the statement of profit or loss, and we call it income tax expense. Now, the deferred tax is going to be the closing balance of our deferred tax. So it will go to non-current liability in our statement of financial position. And then the 45 will go to statement of financial position under current liability. We refer to it as current tax payable. Okay. Now, at this point, I just want to show you the textbook answers to this. So let's check the textbook answers to this. So okay, let me quickly copy this so that I can take it to the textbook answers for you to compare. So let's take this to the answer. So I have the answer here. If I can put the answer that we arrived at, if I can put it somewhere here. So we said that the 24 should go to the statement of profit or loss. So this is our statement of profit or loss. Where will this go to? Well, you first get your profit before tax. So you have the profit before tax, and I'm still going to tell you how to arrive at this profit before tax. Once you get the profit before tax, you bring in that 24. So the 24 here is coming in here. So, and that's what you see. So we've been able to calculate the figure that should come and sit in here as our income tax expense. So this is what you call it. Good. So that is gone. Now the remaining two are items of statement of financial position. So let's check this 56. The 56 is going to be an item of statement of financial position under non-current liability. So let's check our statement of financial position. So we have the statement of financial position here, and we want to check under non-current liability. So under non-current liability, you see it's a deferred tax 56. Good. And the other thing is this 45. The 45 is going to be a current liability, also in the statement of financial position. So let's check our current liabilities. Can you say it's it's called current tax payable? Current tax payable. Okay, so we've been able to generate the figures of this, and this other one in the statement of profit or loss. This. Okay, so and that's what note 4 is all about. So note 4 is what we just attended to. With this note 4, you can generate those 3 figures, but that is if you know what to do. Okay, can I quickly tell us this? Let's go back to the trial balance, because you get to the exam room, that might be your case. You see this current tax, the examiner might not call it current tax in another question. The examiner could call it income tax. So it's either the examiner will refer to it as current tax or income tax. So it could be on the debit side or credit side. And that is what I have for you regarding this video. Remember, we said the focus of this video is going to be for note 4. And note 4, everything that we have said is covered under IAS 12, income taxes. So everything that I've mentioned in this video is through the provision of International Accounting Standard number 12. Okay, so we've come to the end of this video. I just wanted to show you how to go about this, and then for the remaining notes, you can be dead sure this is going to be something that I'm going to be looking at in another video. So I will show you the concept of this non-current asset. How to go about it is not anything difficult. Now, for construction contracts, a lovely idea. I'm going to be showing you that concept as well. And then this note 3, I'll also show you the way to go about it. So if you have any question, please do well to drop in the comments. And you can reach me. My name is Ayorinde Temitope, so that's the name. And then you could reach me via WhatsApp. So the number is +234 803 385 1555. And in case you want to email me, so you could do that using the email address, which is ayorinde.tt5097@gmail.com. So if you also need a copy of the today's class notes, please do well to reach me via these channels, and you can be sure to have a copy in case you want a copy of the class notes. All right, so it is at this point that I'm going to be saying thank you to you for your time, and I'm going to see you in my next video. So please do well to give this video a like, subscribe, so that when I upload videos like this, you'll be among the first set of people that will see my videos. Thank you so much once again. I'll see you some other time. Bye.